Let's take a look at the new IPO ARM Holdings with the ticker symbol ARM that just reissued this week. You may be familiar with ARM as they are manufacturers of CPUs, GPUs, and other semiconductors, and they have their hands in pretty much every sector ranging from automobiles to video games. There's a lot of excitement around this stock because it has an association with NVIDIA. Now, it's important to remember ARM Holdings does not manufacture any artificial intelligence semiconductors. The AI kicker to this stock is that NVIDIA uses their CPUs as part of the GPU-CPU package that it sells, particularly the upcoming Grace Hopper kit. This kit will include 72 of ARM's processors, and that is significant. Because ARM got its start in the mobile phone industry, it has very low-powered chips, which also means they generate less heat, making them really excellent for data centers, particularly when it's NVIDIA's GPUs that do the majority of the processing in the Grace Hopper unit. However, it's important to remember, although ARM is innovative, it could be upset by either AMD or Intel. It is developing CPUs, and it's very good at it, but it doesn't have the same innovation leap that NVIDIA does. NVIDIA is light years ahead of any of its competitors because no one's been developing AI chips. ARM, on the other hand, has competitors that have been developing CPUs, and while AMD and Intel have stayed out of the low-energy space, it's possible that they could get into it. It's also important to remember that ARM is not a new company. In fact, it was founded in 1990, 3 years before NVIDIA, so it isn't a new issue. It's an old one. Because of this, we can look at their revenues, and by any metric, ARM is currently overvalued dramatically. Part of the reason the IPO saw such a huge pop was that SoftBank owned 100% of ARM before the IPO and only sold 10% of their share into the market. Because of this very small supply, it became oversubscribed. However, just like Rivian and Coinbase, which have come before it, there's nothing to say that ARM can't be cut in half from here, especially since it is so overvalued. Like I said, ARM isn't a new company, and it was actually a stock up until 2016 when SoftBank took it private. In fact, I used to be invested in ARM from 2011 to 2016. So when ARM announced its IPO, I decided I did want a position. But just like I do with every IPO, the way I manage my risk is by starting with a very small allocation. I made my first buy on the day of the IPO on the 14th with a 13.2% allocation at $57.28. The way I do this is to shotgun a number of limit orders at the stock. When I started investing back in 1997, commissions were $15 a trade. So you had to make sure you bought a significant number of shares at once. Even if you bought 100 shares, it would still mean you'd be down 15 to 16 cents on your per share cost right off the gate because you had to pay that commission. With no commissions, no matter what size of an investor you are, you can go in and scattershot a bunch of limit buy orders, even buying as low as a share at a time. After many of my buy orders got filled, I had an average price of $57.28. And this gave me a total allocation of 13.2% of all that I want. Typically, when I start a new position, I'll buy between 25 to 50%. So this is a very small start, but I do that to mitigate risk. Past IPOs have been very shaky. Facebook opened at $40 and dropped below $20. Coinbase opened near $400 and dropped all the way down to $30. And Rivian popped all the way up to $122 before selling off to $11. Just because there's a lot of interest in an IPO doesn't mean the risk isn't there. From here, my next buy target is right above that psychological support level at $50, with my next one being at $50.14. And even though this is a long-term investment, I will take profits if it more than doubles from my cost basis. It's the prudent thing to do. I take half off the table and I let the other half run. When you're talking about an IPO or any asset that doesn't have price action to use as a basis, the way I find levels of support where I can buy at is to use Fibonacci retracement. You do this by drawing from the bottom of a move to the top of the move, and you can see that it'll give you levels within that move where it might find support. For me, I have no interest in buying above the IPO price until we get significantly more price action. And since the IPO price was at $51, that's how I came up with that $50 target. However, if you zoom out, you can see that Fibonacci retracement will give you other levels of support too, with one here at $51.88 and another one here at $47.22. If you pull out even further, you can see we get even more possible levels of support as we go down. When it comes to IPOs like ARM, I will only add in small quantities, and I also know exactly how much money I'm willing to risk before I even made my first buy. IPOs are extremely risky and volatile, but I do believe in ARM's long-term prospects, and I think it could grow into its valuation, even though it may take some time.